Welcome back to the channel, everyone. My name is Mark with a C Blake, and you are watching Profits Before Sunrise, a show where we focus on the highest probability trade ideas, executing them with discipline, patience, and consistency. Well, today what I want to do is I want us to focus on market structure. Now, the reason why I want to focus on market structure is because I want to ensure that I help you guys see the market in such a way where you can anticipate what you want to do, as opposed to reacting to the market. You are able to respond to the market. All right, so the first pattern I want to discuss, the very first pattern I want to discuss is trending structures. All right. The first pattern I want to discuss are trending structures. What's that, Mark? Well, a trending structure is one where price pushes down, pulls back up, pushes back down, and then pulls back up. Actually, let me type this first right here. Trending structures. All right, so that is when price is pushing down, then it's going to push up, push on right back on down, and pull back up. Okay, the next market structure would be on an uptrend where prices pushing up as they pull back, then we have another impulse, and then we have a retracement. These are trending structures. The next one we want to look at is known as reversal structures. So what does a reversal structure look like? Let's write that down. A reversal structures. Now, a reversal structure is exactly what it means. The market is actually going to reverse. All right, how do we identify that? Okay, let's take a look. So how do we identify when an uptrend is going to reverse into a downtrend? All right, so we have price pushing all the way up. Let me do it over here a little bit more to the left. So we have price pushing all the way up here. But what it does is it comes down, goes back up, then goes down. Retest. That's a market structure of a reversal of an uptrend. And the same is true for the downtrend. You're going to have a push down, a pull back up, push back down, pull back up, boom. All right. And then the final one is someone guess it. I'm going to type it. Someone guess it. Drop it in the chat. So what's the range and structure look like? Well, you're going to have price push down and then push back up, push back down, and it's just doing that sort of thing. Same thing for the downtrend kind of situation. It's going to be pushing up, come back down, pushing back up, pulling back down, creating trends, heading right back on down. All right, perfect. So guys, these are the three typical market structures you'll find: trending structure, a reversal structure, and a ranging structure. Do we not? We know these two as the break and retest. Now let's dive into those trending structures a bit more. When we have price creating this pivot here, that level, that key level in a downtrend is known as the floor or the support. And up here, that key level is known as the resistance or the floor. Now, when I'm trading, I'll typically use a rectangular box to demonstrate where these key areas are. I'm not talking about an exact number price. All right, I'm not talking about an exact price over here, like right now it's at 2,425. This one right here. I'm not talking about a price. I'm talking about an area. So 2425.77 and 2408.52 is the area, because sometimes price will come and move around in that zone. So I want to identify my lower low. This would be your high. All right, so let me drop that there. So this would be your low and this would be your high. Well, once you identify a low and a high, you want to wait to see if this low is going to be violated. If that low is violated and forms what we call a lower low, then you're waiting to see if price is going to retest that area to then potentially take this market down for a sell. This is typically where we identify the sell, not when it breaks here and starts to push down and then get in. You know, some traders trade like that, but more often than not, the traders who are patient and await for confirmation that we're in a trend will wait to see this retracement, retesting this key level to then push back. Now, even sometimes you might have a high that's being tested. We do get that sometimes. And if you get that, ladies and gentlemen, yes, you can attempt to take a trade off of this if in the event there's no violation of the high. Because if there's a violation of the high, we're going to look after why that could be actually a reversal, right? But you want to wait until price is pushing down, breaks this key level, then you can get in on your trade idea. So that means you'd be looking at a trade kind of like this. All right. And we usually do a 1 to 3 ratio if we're going for pips. But I'm just using this so you guys can see the direction. All right. So you'd be taking it down. And if you're doing HFX, your stop loss would be above the recent high. Your take profit would be a 1 to 3. So if this is 10 pips, this would be 30 pips, 1 to 3. Okay, cool. How about the trending structure for an uptrend? Same thing. If it is that you have your low, create a high, then your retracement creates a higher low and violates this high, then you're going to be looking to take that trade off that broken area up. Right? Does that make sense, guys? These are our break and retest patterns. All right, so let's see if we can find that example here. Let's see if we can find that example here on this. I'm actually on the daily. It can work on the daily too, so let's still use it. Let's still use the daily. And let's zoom in and find an area. You're gonna find it a lot cleaner on the lower time frames, but let's do it right here. Here's an example. All right, here's an example. All right, we have two right beside each other. So let's do this. Two beside each other. Let's start with the downtrend. So price pushes down, creates a low, pushes back up, breaks this area, pushes down, comes back up, retests that area, and then pushes down. You guys see that? So let me draw the box. So this would be your low right here. Price breaks it, comes back, retests it, and then drops. We also see that here on the buy as well. So price comes up, creates a ceiling, trades into it, pushes off and goes up. All right. Now that's not as clean as I would like it, but you guys get the idea, right? Here it is again on this uptrend. All right. Let's do the step up. Creates a high, comes back down, breaks this structure, makes another high, higher high, comes back down, forms a higher low, trades into the zone, off to the races. Comes back down, breaks this structure from this candle, break that structure, comes back down, tests it, off to the races again. Going down, same thing. Right here. Comes down, forms a low, break of structure, comes right back into structure, the broken area, trades down. Happens here again like we just saw. Right? So it keeps on doing it step by step by step by step. All right? Perfect. All right. So the next market structure, okay? All right, cool. Now, how about reversal structures? How can you actually identify a reversal in the market when it's coming up? Some people might say, Mark, how did you know? How did you know? Well, we understand that the market moves in a particular way. There are patterns that we must identify. So let's say price is trending on up nicely. And we get to a ceiling. It gets rejected off that ceiling, comes back down, creates a floor, goes back up and checks the same ceiling. This is known as a double top. Now you have a lot of people who will trade off this double top area. But I'd suggest that instead of trading off this double top, you want to wait for market to confirm that reversal, push down, violate this low, and then potentially retrace back into this level. Then you take your sell. Now it becomes somewhat like a break and retest. But your confirmation that it's going in the direction of the sell would be because you have this double top pattern up here. And then same can be said for the reversal to the upside. Wait for it, retest, take it up. A lot of people will trade outside of this zone on the double bottom. That's fine. I like to see it, and I want to see a confirmation that we're actually going in the reversal. That's where I look to take my trades. Do we take the trade here? No. Do we take the trade here? No. Do we take the trade here? No. Wait for the retest. Do we take the trade here at this high? No. Do we wait for the trade to break the low, violate the low, and then sell right here? No. It can be done. A lot of people do it. I suggest, based on my back testing, higher probable trade ideas come from these areas. All right. Now, y'all know I don't like trading consolidated markets, but hey, sometimes that's what the market dishes out, and that's what and all we get. And so I will trade in the ranging zones. However, I will very carefully only trade in the ranging zones. I am not trading this. Anything in between here, in between the high and the lows, I will avoid it and trade the higher ones. I'll trade it down or I'll trade it up. All right. Let's take a look at this double top and double bottom. And may have to just switch to the 1 hour time frame. All right. Now let's see if we can identify that for you. Let's use this for example. So here we go. Price is on an uptrend. Yes, it's on an uptrend. So price actually pushes up, creates a high, pushes back down, creates another high. But again, I'm going to say we'll use these two. All right. Price creates a double top. It doesn't create a higher high and a reversal for a higher low and continue. It instead violates this low, trades back into that zone, boom, starts its downtrend. See that? Starts its downtrend. You see that, guys? So from here, boom, it starts its downtrend all the way down. That's 609 pips. A matter of fact, even lower. It hasn't been back there since. So if you caught this, you're looking at a possible 1,648 pips to downside. 19th of June. Does that make sense, guys? Does that spell dollars? Here we are. Key level. Floor. Right? Price breaks it. Retests into that area. Direction change. So we're coming out of this downtrend. Well, this is consolidation here. Coming out of this little downtrend here. Boom. Switch. Then we're gone down. I want to make sure I'm doing this, guys, so you understand the structure. It's there. You can see it. All right. Let's see if we can find another example. So as I switch from an uptrend to a downtrend, let's see if we'll find a downtrend to an uptrend. Here we go. So price is actually pushing down, right? This one is not as clean either because price pushed all the way down here. But look at what happens here. Look at what happens here. See that, guys? We're moving from a downtrend. We have our double bottom. We have our violation of this area. Price pushes back down, trades in it, and we're out. What triggers it? Your eyes. You need to be aware of when the pattern is formed. In order for you to anticipate that there's going to switch, you have to see this pattern right here. So once you get your double bottom, you get a breakup structure, price retest that structure, you're in it to win it. Watch this. From here to here is an entire parallel channel. The market is just moving downwards. There is no point in time here you have a double bottom. Watch this. You have, boom, the first breakout structure here. You have a retest into that area. Sell the market. You have a floor being created here. You create a lower low, price trends into it, sell the market there. You have yet another low right here. Price breaks it, trades into it, sell the market here. Price breaks this low, trades even lower here, breaks it, trades into it, sell the market there. So this is one opportunity to sell, two opportunities to sell, three opportunities to sell, four opportunities to sell, five opportunities to sell. Okay, now we're at another low created. All right, another low created. Price breaks it, retests it, gives you one candle, but then pushes up. And not only did it push up, it violated the higher high. Remember when we were looking at the other structure, I said when you violate this high is when you start to look at a reversal. When you take out this high and you're no longer forming lower highs like this lower high and this lower high, if you're not creating another lower high, but instead you violate that lower high, you're now looking for reversals. You're no longer selling the market. So now that you're no longer selling the market, you're looking for a reversal. Well, boom, You got it here with your double pattern. Once you get this with your double pattern, because let's think about it. Are we still selling? Can we continue to sell the market? Up here, you have no reason to sell the market here. There's no break and retest. You're waiting for price to push down, and it did not violate this, so you're not looking for a retest of this level. So now you're in limbo. You're like, okay, what is the market doing? It's now consolidating sideways. It created a double bottom. I'm not ready to buy or sell yet. I want to see if it's going to break out of this structure here and retest, which it did. Now you start to buy. Does that make sense? So the duration that you're talking about from here on down, you're not going to know until you see the violation of the structure and then waiting to see that pattern that you want to see. Now, what if this just continued to consolidate? Well, you buy and sell on the highs if you want to. If it continued to push right back on down instead of pushing high, that's okay too. The market will do what the market wants to do, and it will continue to push down and continue your lows and your highs. Well, in that case, you continue on your trend. But if you spot this and it violates this and retest it, you're gone. You're off with it. Now we're into consolidation here. This is an entire zone. We're not really breaking and retest much of anything. Let's take a look. This is the high, right? Created. Now, if we were to take a break and retest, actually, this would be the break. This would be the retest. You're looking at this just one candlestick. You're jumping in right now for the goal to think that it's going to continue up, but it doesn't. So if you took this thinking that this was the retest, that's a failed trade for you. No problem. You get stopped out, you're done, right? You get stopped out, you're done. This would have faked you out. Me, I like to see an arc. I like to see a clearance. When I'm trading longer term, I like to see a clearance and a retest, not just a retest like this. This is too soon for me. I like to see this movement. Boom. And let me just draw that arc for you. Now let's say we did a replay on this. None of that is there. Okay? This is what I'm looking for. A clean break, an arc to come back down. Then I'm looking to take that trade. So now I'm looking to take this trade. We're fired up. All right, all the way up. Now, if we're trying to attempt to continue buying, I'm taking the retest off this. This is the retest. I'm up. It fails. Guess what? That's a failing trade. You watch it. And now you're going to recognize that price would have created a low. And you're saying, okay, are we going to be breaking this low to retest to keep going low? Well, it never did that. So you're not selling the market. It never did that. And then once it came back up, you're looking for these highs. You see, create a high here, right? You're looking to buy the market up. Guess what? It doesn't give you that. So you're just in consolidation here. You're just waiting. Or you can actually attempt to buy and sell off these highs. I personally don't suggest newbies or beginners do it. It's pretty dangerous. So I stick with trending markets. All right. Currently, right now, price is pushing down. All right, this is an impulse. We push down, created a low, push back up, created a high, push back down, created a low, push back up, created a high. I'm looking to see if it's going to push back down, create a low. All right, where is my current low right now? My current low right now is from here to there. That's my current low. So what I'm waiting for right now is to see if price is actually going to continue its trend to break, retest, and keep going down so I could take a trade, right? All right, so let's take a look and see what happens. So price breaks here, right? So now I'm looking and waiting for the retest, but I have to see a low form first. Okay, great. So a low is formed. We have our low right here. Right? And now you're going to go for a sell. Right? Boom. So you just got your convincing candle here. Let's say you went in there. Price is still trending up. So now you did not get that break of the lower zone. You got the retest of this zone. You got one candle. You got one candle giving you the sell. So if you had taken this trade, let's say HFX style, within that 1 hour, that would have been a winning trade, because for this hour it's a selling candle. So it broke, it retests, you sold it, and you're good to go. That was one trade. Boom. One trade right there. You see that? All right, now let's keep going. I'm waiting for price to actually violate this level right here. This one. It already came, violated this level, gave me a retest, pushed down. Let's say I got into that, won that trade. This is not FRX now, HFX. Won that trade. We're looking for another break and a retest of this level, but price is pushing up. Well, where is the high that it had created? It was right here. Okay, so we're waiting to see if price is going to violate this to start going up or push right back on down. Let's watch and see. Well, it didn't violate it. It's still going sideways. So I'm waiting for it to either break this for the retest so I can keep going down, or I'm going to watch to see if it's going to consolidate in between these zones. So what am I looking at right now? Let's get rid of that, because that's no longer the focus. The focus is this low and this high. We're trapping the market. All right, let's keep going. Consolidate, consolidate, boom. So we can see where price came right close to here, right? We have one touch, we have another one close to here, then price reacted violently, pushed off. So this is one low, this is one high. This is one low, created another high. So we know that this zone also is a strong zone. So we're consolidating in the market now. We did not get to break and retest. Let's keep going. Still violating, still violating, still violating, not breaking it. Boom. All right, so now we're seeing some push up into the zone, right? Here is where I start to think to myself, okay, if we break this zone, which is the higher zone, we're looking to see price give us a double bottom. So price came down, you're following the market. Came down, came up, came down, and it's pushing past it. Now, if this breaks this zone, for us to see the reversal, we wait for the retest to that zone, we take it up. But we don't know if that's going to happen yet, so we're in patience waiting mode. We already got one trade that was correct off of the break and retest. Now we're waiting to see what the market wants to do. We're not trading in consolidation. We're waiting to see if we're going to get a break and retest to the upside, or if we're going to get a break and retest to the downside. And you will see me draw these two boxes and do one to the up, one to the down. So this is what we're looking for. So let's keep going. Price still hasn't broken it as yet. Let's extend this. So price actually breaks this high now. It gets higher and closes above this zone. So my trade idea now is going to be dependent on if it comes right back on down to retest. I'm also taking into consideration the last high. The previous high, which was right there. Look, it actually came, wicked right into it. So if I get this pullback, I'm looking to take this back up, and guess where would be my first target on an HFX trade? Right here. So let's go. Aha, boom. Price has what? Pushed right back on down. It's now entered into my zone, wicked into it. Ladies and gentlemen, this is playing out very perfectly. I just randomly picked this spot, guys. I randomly picked this spot. So this is not rehearsed. All right. Let's just keep going. Price pushes in. Let's kind of move it up. Boom. So look at what happens. Boom. That's it. That's what you just identified. This is the double bottom pattern. You would have entered this trade long term right here. You put your stop loss either below this low or let's say below this one. You do a 1 to 3, so if that's 62 pips, you're looking at least 18. Set your alert close to your target, because if you set your alert at your target and price just happen to wick close to it and turn around, you miss that whole thing. So you put it close to it so you're on the alert, so you're now watching to see what you want to do. But let's keep playing. Boom. Plays right back on down into this zone. Now, am I going to continue to buy because it has retested this level? That's your choice. You can do so. But if it violates this and keeps on coming down here, then you have something else that you need to identify. So let's just keep playing. Oh, wow. Test, 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 test. Boom. It hasn't violated this. So that's a key level. This level here, which was over here, key level. Right? This is back testing. This is what we do to identify how the market is moving. You see this? Boom. Retest the zone. You take that next trade. You are again in the money, at least 117 pips. So, I mean, I could go further. It's 552, but I hope you get it. That the price is still going to come, push into that zone and keep going down and keep going down and keep going down until it's ready to turn. I know it will turn. Play off the zone. Look at what happened. Came back down, hit it once, you're in it to win it. In it to win it, you took it up, you won. Came back down, gave you a second entry if you wish. Got in here, it's up again. You're in some pips. You're in some good pips from here. Let's say this is the confirmation candle. You're in it for 35 pips. That's good pips. At one point of my trading career, I only wanted 30 pips and I'm out. 30, 30. 30 down, 30 up. Either way, I'm out. Where is the next key level? This would be the key level right here. This right here was your next key level. That was the high. It came back down, retested. You traded off this one, took it up, won. All right. Came back down again, took it up, won. You're not going to do anything until you break this level to continue going up. Let's see. So you just broke that level. What are you doing? You're waiting on a retest. Now, some quick fingers are going to take this candle as the retest. Some quick fingers will take that. Others will wait for a bigger curve. Boom. I just got my bigger curve. I just got my bigger curve. I'm probably in the market here or waiting for it to get more into the zone with a convincing candle. Boom. Here we are in the zone. Convincing candle. Boom. Big push up. Let's measure that. From here all the way up to this, that's already 122 pips. What more do you want out the market? So where's your next key level? Right here was your high. What happened? Price broke it, came back in, place your trade. Take your trade. Just take it. Right? Look, I'm having so much fun. I could continue doing this all day, every day, but ladies and gentlemen, we have to unfortunately say goodbye. It's time. I hope you guys got some value from this. Just to break down the market so you can see and understand how to trade with confidence, just identifying those key levels of resistance and support, supply and demand, whatever you want to call it. My thing is just simplify this thing. Just simplify this thing. If you want to really learn how to identify the highest probability trade ideas, identify your SRTs, support, resistance, and trend lines. That's all you need. We have not yet looked at an RSI. We have not yet looked at this indicator and that indicator. This is naked trading, understanding price action and market structure. You do this all day, every day, you're in it to win it in these markets.